Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 31st, 2025, and we're diving into Phillips 66's latest earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Phillips 66, a leading integrated downstream energy provider, has just released its fourth quarter and full year 2024 earnings. There's a lot to unpack, from strategic initiatives to financial performance.
Revenue and profitability overview. Let's start with the financials. Phillips 66 reported fourth quarter earnings of $8 million, but an adjusted loss of $61 million. Can you explain the discrepancy, John?
Absolutely. The reported earnings were impacted by a significant $230 million or pre-tax charge for accelerated depreciation at the Los Angeles refinery. This led to an adjusted loss of $61 million for the quarter. However, for the full year, Phillips 66 achieved earnings of $2.1 billion and adjusted earnings of $2.6 billion, showcasing their overall strong performance despite the quarterly setback.
Shareholder returns and strategic initiatives. Phillips 66 has been active in returning capital to shareholders and pursuing strategic initiatives. What are the highlights here?
In the fourth quarter alone, Phillips 66 returned $1.1 billion to shareholders through dividends and share repurchases. They also surpassed their $3 billion target in asset dispositions. Additionally, they announced the acquisition of Epic's NGL business, which will enhance their midstream operations and is expected to be accretive to earnings.
Operational efficiencies and future outlook. Operational efficiency seems to be a key focus for Phillips 66. How have they performed, and what are their future plans?
Phillips 66 has consistently operated above industry average crude utilization, achieving significant cost reductions of $1 per barrel. Looking ahead, they have set ambitious targets, including debt reduction and EBITDA growth, supported by their world-class operations. They aim to return over 50% of operating cash flow to shareholders, which is a strong commitment to enhancing shareholder value.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 20 cents for the quarter. How did Phillips 66's actual performance compare?
Phillips 66 reported an adjusted EPS of -5 cents, which is better than the forecasted -20 cents. This indicates that despite the challenges, the company managed to perform better than expected, which is a positive sign for investors.
Key takeaways. In summary, Phillips 66 faced some challenges in the fourth quarter but delivered strong full-year results. They returned $5.3 billion to shareholders and made strategic acquisitions to bolster future growth. John, any final thoughts on their investment prospects?
Phillips 66 is well-positioned for future growth with their strategic initiatives and commitment to shareholder returns. Their focus on operational efficiencies and strategic acquisitions should continue to drive value. Investors should keep an eye on their progress towards new financial targets.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Phillips 66's performance in the comments below.